Hello, this is Jordan, and this video is being recorded just minutes before the market close on Thursday, July 18th, 2019. And in this video, I'm going to answer the question, what you should do now in case you missed the rally or you're currently underinvested in the precious metal sector. So this is going to be a quick video. I just have two slides here. The first things first, focus on the companies. Remove metals prices from the equation and focus on the individual companies first. Look at the value of their business. Try and assess what it is worth, where it is going, and if they can add a lot more value regardless of where metals prices are going. Now, after you're done with that fundamental analysis, then you can take a look at the chart and look at, or at least categorize the ones that are really overbought versus the ones that are not, and also versus the ones that look like they're about to break out. And I'm going to talk about half positions and full positions in this next slide. So when we're looking at trading strategies, we want to focus on the things that have not moved as much or look like they're about to move. I mean, that's where breakouts come in. Or focus on things that maybe they had a big move earlier this year and they've still been correcting and consolidating because they got so overbought 3, 4, 5 months ago. Those are also good potential buys. If I did this video a week ago, silver and the smaller juniors, that would have been an excellent area to get into. Obviously, the move in silver has already started, but nevertheless, keep an eye on silver and the smaller juniors. There still is probably an opportunity there to get into some things that in the bigger scheme have not moved that much and are not that overbought on a medium or intermediate term chart. Now, also look for things that have breakout potential on the charts. Again, we want to avoid the rhino horns, things that have gone straight up in the last month, because those at some point are going to correct and consolidate. But look for the things that have been consolidating for a while that are trading below resistance and have the potential for a big breakout. There's a few of those out there. And one of them broke out today, by the way, but I'm just going to leave it there. I'm just going to tease that. Now, as far as corrections, don't wait for a 25 or like a 30% correction, because that's not going to happen. I mean, it will happen at some point in a lot of these stocks. We know that. But by the time that happens, it might be 50% higher or even double where it is now. So in the very short term, look to take advantage of like the 7 or 10% corrections, because that's another way of reducing your risk here in the very short term. Now, half positions versus full positions. Now, for the things that are more overbought, they're more extended, but you really like the value, you really like the company, you want to get involved sooner rather than later, buy half positions. If a full position is 6 or 7%, buy a 2 or a 3 or even a 4% position, and then later you can top it off and make it a full position. Now, the things that look like they're about to break out, or things that you really like the value and they're not that overbought, those are the type of things that you can buy full positions in. So I hope that these things were helpful in case you missed the rally or you're underinvested. If you want more of these insights, you can follow all of my work at thedailygold.com. You can opt in there at the top for my book. It has all my best research on precious metals. You can also consider subscribing to my premium newsletter. It's only $149 for 6 months. You can find that at thedailygold.com/premium. We focus on market timing and stock selection in the juniors. If you want to know which are the juniors that really have the goods and the best potential, you can sign up for our service. Thank you for listening and watching this video. I really appreciate it, and I look forward to publishing another one in the next week or two.